Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choice. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Hey guys, what's up? Sorry getting off a little late today. Ran into some few errors with Excel, but I think everything's working good right now. So just looking over at today's dashboard, this is where I actually had some issues. Some of my stuff wasn't like pulling in and updating properly, so I'll have to figure it out. It says it's an expression error. It's a pain. As websites change things, you get used to pulling in certain things. If they change any little thing on the website, sometimes it throws it off, so you just have to kind of update stuff. But overall, look like a lot of mining type stuff is up today. I don't own any miners, but I was just looking at a few last time that looked all right, but they were pretty small players, so I don't know how much anything like this kind of larger indexes would affect them. Risk category, just stuff's bounced around. I don't really see anything too important. I'm still a little actually behind, so today's stuff, what we're covering here, is really stuff more from, let's see, today's Tuesday, so this would have been stuff over the weekend, so I'm just still getting caught up on my weekend stuff. I do have all my stuff updated from Monday night and today as well, so if we get through these, which some of these are names I've looked at, so it might not take me too long to go through them. Tomorrow something popped up, or even just like chart movement or something might have caught my eye, so I am basically just checking those. Barnes and Noble Education pulled up for me because it looks like they had a decent earnings, I think is what it was. And I think it was Courage and Conviction had commented on it. I think they're bullish on the stance. Basically, the idea is it's pretty highly levered. They're changing their business model where it might be that the schools kind of package the books in with tuition, so it would move like more of like a guaranteed revenue stream for anyone that got involved in that. That's just what I read though somewhere, so I don't know quite where that's at either. But I mean, Courage and Conviction here is saying it's looking for 2 on his note here. But the big news and kind of what's saying here is this? Yeah, this is from December 6th. So revenue's down slightly, but EPS was a beat. Retail segment store sales increased 3.6%. First day complete revenue, I'm not even quite sure. That first day, maybe that's the program I was talking about. Consolidated GAAP net income from continuings up 2.8%, so that's good. And basically, I think from what I read, Courage was just basically saying that like they can use that extra free cash flow that they're generating during all this to hopefully pay down some of that leverage, because they do have stuff coming due. I think it was in 25, either 25 or 26 is when it's due. So they just need to start to work on that leverage, because that's why this is considered a risky play, and that's definitely why it's kind of been penalized for it by the rest of the market. Let's see here. Blah, blah, blah. I have already scrolled through some of this. He always puts out good stuff, so it's always worth the entire read. But I just want to get to the debt part here. All right, so long-term debt was $233 million, and its cash was $15 million, so net debt of $218 million. This is significantly better than the $277 million. and only 7.7 as of July 29th. So that's what he's saying, is it went from 277 now to 233. That's still very elevated at 5.5 times, based on a 40 million for 2024 for adjusted EBITDA guidance. So it's not to say this doesn't have risk, but that's kind of what caught my eye and started to make me look at this one. If we pull them up on a chart here, let me just move this out of the way. Back to here. If we pull it up on a chart, it's definitely bounced off the bottoms here. But if he's looking at a $2 price target, which he's saying that based on deleveraging this thing, my leverage calculator is still penalizing him quite a bit. And I think that's due to the free cash flow only being just recently positive. I take into account kind of longer term metrics. But if they did delever the balance sheet, it's definitely something you got to take into consideration. So he said, let me see what I just want to check my numbers here, because it's kind of messy because the way it mixes them in here, it's not as. I'd have to go to the actual balance sheet. Hang on here. Let's actually just go on to the SEC. That's why it's good to have like articles and stuff, because just me looking at a quick thing here, and then I mean, I usually will check the balance sheet almost right off the rip, but otherwise you get this idea forming in your head, and then you realize it's totally wrong. Yeah, so the long-term debt there's, so the 160 is the operating leases, and then there's whatever other long-term liabilities are for them. So that's what that actually is. So the debt's 233. They got 15 in cash. And then what does it say about the notes here? Maturities in 28. December 28 of 24. I was gonna say, I was like, they have plenty of time. No, they don't. So they have a year to kind of get this under control and or take out something else or restructure it. So I guess the idea would be that they could kind of work on this, or at least have some time. There's not a lot of time. And like I said, he's saying $2, which, what did he say how he came to that conclusion? Because like I said, my leverage calculator, it's just something, it's just like something to more warn me when something's super leveraged, let alone try and use it actually as a so he's got a price target of 2, and I'm assuming that's just because of the deleverage. Whatever he's using to calculate that, he's using the new lack of debt, I should say, or less debt. So I think the real story here, if we go to the actual business page here, we'll see what their most recent presentation said. Do they have presentations? Some of these websites aren't as... there we go. Oh, there it is. This is all I wanted. Hopefully this is, yeah, this is more of a, just to give a little bit of talking points here. Executing on strategic initiatives to drive profitable growth and cash flow. And this is for second quarter of 2024. So their year is a little off from the rest of it. But let's see. Increasing EBITDA. Growth of First Day Complete. 157 campus stores utilizing First Day Complete for the fall term, representing enrollment of 800,000 students. And that's reported by some National Center for Education statistics. So that's good. I don't know if they're going to comment more on that, because that's more... Because if they're going to turn this around and be able to make some cash here, I like the idea, because books are expensive, so I'm sure there's a market there no matter what. And you know, you need books. I'm surprised it hasn't gone digital and the cost just hasn't got driven down, but I know everyone's trying to make money off their books. And not to say that your education is not valuable. Yeah, speaking of, this is my next one I'm tackling here. Yeah. But let's see here. 128 stores lower, 76 fewer physical stores. Focus on winding underperforming. So they're doing everything you should be trying to do here in this kind of later point in a company's life. They're trying to take advantage, increase margins, get rid of the stores that aren't performing, and then kind of pivot, I guess, into this first day. Let's see here. It doesn't quite talk more. I'd probably have to dive into a more quarterly thing. Revenue down. Yes. Okay. Gross comparable stores. So the store stuff's all down. This first day complete. Let's see if he. Because I thought as I looked down here, it wasn't. Oh yeah, so that makes it, and it's actually a pretty good reoccurring revenue source because you got to think about it. There's all these different semesters. You know, some colleges are 3, some are 4, including summer and winter classes. So you could possibly get influxes of cash at different quarters throughout the year. That if they're not used to getting it quite like that, I mean, obviously that's when they're going to sell books, but to guarantee it a little bit more. Yeah, 157 campuses. So there's a lot of room to expand there too. So the risks that at least he talks about are, 61 in free cash flow, still has a lot of net debt, needs to continue to perform to get the debt refinanced. Obviously, the better position you're in, the more money you're making, the more easy it is for another person to give you or refinance you. But we also are in higher rates, and the timing's kind of ugly. So this is kind of you got to put the pedal to the metal here and figure out what they're doing to fix this. Not to say that they aren't. At least it looks like they're going in the right direction. It's generated. So it looks like Kingdom's also in the comments here, and he's basically just saying that they're talking about possibly selling equity, well, obviously to cover the debt, but he's basically arguing, why are they going to dilute themselves if the free cash flow is there? So, but who knows? I mean, maybe that's what they're thinking of doing if they're not able to quite generate enough revenue and possibly restructure that debt. Like if they think the restructuring is going to be so ugly that it's not worth it. But yeah, so one other thing I just wanted to look at this is just they're all talking volume and what stuff. And I mean, you could see last time I looked at this, I wasn't impressed by any means. I'm thinking bankruptcy if it's if I'm rating it a 1. So I wonder when that was actually. I'm kind of curious. Ooh, 722. Just want to go back to the I never got cheap enough in, and that's just because the metrics looked ugly there. And that's why I say it's tough to go off those metrics, because I put in 40 cents there, but 40 cents. Oh, here's fundamentals. I'm trying to find everything here, because this comes back at 59 cents. So this is saying it's even worse than that, but this is from 9:30. I have a hard time thinking that that's the operating leases are throwing these numbers off. That's the problem, is the operating lease is throwing these numbers off. So I'm trying to think if there's a quick way, just with my data, I can adjust the numbers. Because if I adjust it the way I have this set up, it's not going to bump this up, and I need this to be bumped up, essentially the book value, which will change the overall look on it. I mean, this is intangibles at $53 million share count. Let me just do some quick math here. Because 530 minus 1.6, and then we said it was 233. They're generating 60 in cash flow. Actually, I have to pretty much just go right to the SEC's page, because there's a problem with different trailing 12 months and stuff. It's not always equal. Oh, do they have preferred? They have stock-based compensation. Is that what the preferred is? Possibly employee benefit plan. No. Anyways, so we'll just say that's cash. It's 15. So yeah, that brings me to 190 is what I would get. So 190, and he says 2, so I mean, I'm not far off. Now, obviously, like I said, this is still risky. I mean, you look at this, EV. I don't know if this EV is actually taking that cash off, because it shouldn't be quite so high. But either way, oh, that's right. They don't have that. They don't actually have cash like that. I don't mind this one. It's a little risky. I think I'd like to see it get a little cheaper before I would get interested in this one. Because if I had 190, it would be more interesting to me around like just over $1, which there is a little bit of support around there. I know, it's just drawing lines and what nonsense this is, but sometimes it's something to watch for. If you can watch volume, see if volume adjusts on any of those to really see if the support's real. I'll keep an eye on this one, definitely. So you go back to my database here and just adjust kind of what I said. I'm not going to bump this one up too confident, because I'm not super confident. Because if they're talking about diluting shareholders, that's going to hurt the price. That's definitely going to hurt the price. So I don't want to do I don't want to get in around there. Kind of get screwed that way. So that would give me 100% upside at 95. So this is probably one that I'll follow, and then I'm going to throw it on deck just so I have it. I don't know. I would like to see what's going on with a preferred. I don't know. It's in the filings here. Let me go actually one thing. Let me just check the 14, see if that states what that's coming from. course, it doesn't just find it. Here we go. Quite a bit of people here, actually, that own decent amounts of this. This is all common. The directors own 12%. These are all different. Here they are. It's for the children. That's the other thing too. You know, as we talked about, saying that we do concentrated positions in general, you gotta really calculate your downside, which is why I'm hesitant to get in at this level. You know, and for every missed opportunity, it's all right. It's not the end of the world. Like, I don't really care if I miss something. I mean, if it really goes up, it hurts. But I value losing. You know, making my margin of safety if it's not correct, which is, you know, it's rare now, but that's because I'm so conservative. And usually it's something's just starting to turn, which is why some of these ones are interesting. Another one that that I just looked at is NCSM. Let me just get these guys going in here. This is going to take a second to pull this one up. But I think Stavos, yeah, Stavos is the guy who's in this one. He owns a big amount. The problem with this one is the volume is so low. Like, oh my gosh, it's like you buy, you could jack the share price right up. So I think, I mean, it's not a super cheap price. So I mean, you do have to pay a lot just for your shares, but in comparison to most companies at this level, most aren't trading at $17, but there's only 2 million shares out there. Obviously, that number's rounded, but this one's interested because they had adjusted their EBITDA because there was a $40 million litigation against them that got dismissed, or their insurance basically is covering it for him. He's not dismissed, but so the balance sheet is totally off. Like, so. The argument is basically most people that probably haven't even heard or looked at this because the screeners aren't showing it, but now the screeners are going to show it, and it is generating pretty good cash flow, that kind of thing. So I actually got this at like, I think this could get up to like 40. Now, do I think it could get up right now? Probably not, but I just think that's going to improve the balance sheet pretty drastically. And if it's generating cash, and it seems to be, and it's kind of transitioning the company itself. It helps with like fracting, and it has like all these different kind of products. So it's the different kinds of products. It's a little bit much to actually go through it, but they do have really nice presentations, so that part really explained it a lot better. But yeah, Donovan Jones was talking about it, but he didn't really say much, to be honest. And so here's the lack, or the change on the litigation, and even on that though, it didn't really like have some crazy volume or something like you would expect it to. I don't know why that opened on this webpage. I don't need another webpage to open. But yeah, it is generating quite a bit of cash here. Now, obviously, it's cyclical. Has to do with oil. Has to do with how many fields it has, and where the fields are at, and how much use they're getting. But they don't have a lot of liabilities. least you compare it to their cash and everything like that. So they're going to be in a good spot here. So just for you guys, I'm looking at this too. So obviously you're comparing cash here on the asset side, checking long term. This is that 40 for the legal contingencies. That's just going to basically go away. So their earnings and everything like that have look a lot worse. Like on here where I have these minus 14, that's going to change. If they're minus 40 here, they're going to be positive. I think that's adjusted EBITDA with my numbers. Let me actually check that real quick. Some of these things. So 38 revenues, net income. 1.8 million. So now they're saying this is in 3 months from September. But I know they had adjusted EBITDA in one of their things I was reading, because they just kind of showed you how it was performing. Oh, okay. Yeah, there's the operating activities. So now it's normally that net loss, but that's because of this litigation here. So that's going to go away. So things that concern me, though, just with the overall business on this one, which is why I'm still a little hesitant with this one too, is just the assets the revenues are shrinking, and the business is pivoting, and I wonder how much profitability is there. Now, I don't know, so I'm not saying I'm like one way or the other. I'm just saying I don't know. So just trying to, I'll have to dig into more than that. But at least this was two that I found pretty interesting just today. We'll keep going on just because I'll have to dig into this stuff, and it's a lot more reading and all that. And I know as much as you guys would love me to read all this stuff, I'm not going to bore you with that. I pulled in EOS here just because EOS is strictly a news story. It's a battery company. They took on quite a bit of short interest. Oh, I gotta refresh this sheet here. There we go. A lot of shorts started getting interested because the stock really was jumping all over the place. It'd be up like 100%, down 100%, up 300% down. So I think it's just starting to become far enough along in the business cycle where people are starting to really kind of question, are they going to be able to pull this off? Because if I remember right, they've never been profitable. I don't think they've ever had a positive earnings. So as long as this loads, there we go. Okay, so earnings per share have always been negative. Pretty heavy dilution there. Just want to see what the yeah, and they keep adding on debt. So I mean, this one, like I said, mostly news, but just interesting because I have actually went in on this. Yeah, that's what I was thinking. It's execution issues, and yeah, probably gonna need additional capital. But what I do remember is yeah, I don't even know how Henrik covers. Henrik, man, I don't know how you cover all these stocks. It's like half the time I'm looking at something, you're in the comments somewhere, and I'm like, how is this guy doing this? I mean, obviously, maybe you have a little bit more time during the day to focus on this stuff, but it's me just doing it outside of my normal work. Some of you guys, I'm like, man, you guys are on top of this stuff. I wish I was able to spend more time here. And like, if you look at mine saying you got to deleverage the heck out of this thing to get this to be anywhere near profitable. So I was more just seeing if anything had changed in the story, which it doesn't look like there has been. In terms of performance, they have to perform. Yes, every business has to start performing better. So we'll see. We'll see if anything comes of that. Yeah, pricing a $50 million public offering. Yeah, so launch proposed, and now they're saying 50, huh? So what does it say for the short interest? That's actually why I was coming here. Thank you. Yeah, 24%. It's a lot of shorts. I don't think that bodes well. They're going to need the money, but I don't know. You'd have to be pretty confident, I feel like, in that story for that to make a whole lot of sense to really go heavy into something like that. So I don't even really need to update EOS, to be honest, because not much is going to change there. But let me actually just mark that I looked at it today, because otherwise it'll be like a week from now and I'll be like, well, when was the last time I looked at that? Just drop these right down to reasonable numbers here. So it needs more. All right, here. Let's keep moving along. I think I just looked at these guys not long ago. See if anything pops up here. I mean, everything's negative. What? There had to have been something that caught my eye on why I looked at this. I got to go to my my dashboard here and see. Sometimes, I'm interested in something for a different reason. It's not because it's actually probably something really worth looking at. It's more I'm just following up on something or just trying to find out where this was. Oh, okay. Minus. I think it's just because it's trading so cheap on book. And I had earnings on this from whatever that day is from. But this has just been going straight down, so this hasn't been able to do anything. Or how are margins here? Are they doing anything? Not enough. I mean, revenues are increasing for whatever that matters. Yeah, I don't think there's anything to really say here. I'm just going to check Seeking real quick just to make sure no one else has figured something out from knowing it better. End market strength. Pulling it well relative to most additive manufacturing peers, probably a result of the company's large exposure to defense. Yeah, let me just see what the actual. This guy's just saying to value it off of the growth. Which you don't really have much to go on, so. So he's using price to sales. Is there any insider owners or anything on this? A lot of selling. Granted, this guy owns a lot, but that doesn't make you feel super all warm and fuzzy now, does it? Let me see. What Well Wisdom has going on. Just want to see if there's anybody bigger or any kind of firm or anyone that owns it. Heritage. Is this the right company? No, it's not. just VLD is what I'm trying to get. I don't know why. Sometimes it does not, but Gear Management Company? How are these guys? Rocket Lab. Not really. Not really my kind of companies. All right, so there's some interest, but it's still too early. Still too much of a growing thing. VLD here. So we'll update this. This is already saying 43 cents. It's probably not. Let's go with my numbers here. I know these are harsh, guys, so if you see these numbers, you're wondering why I'm using that. It's just in terms of my confidence, like the way I set up my valuation is you have to be more confident in that. You can't just fill in the gaps, in my opinion. I'd rather take my time and find companies where I can get pretty sure values. Like I said with multi-stage holdings, or NCS, I should say. I just have to figure out how it's going to pan out, because to me it looks like this is really cheap. But this was the other thing is when you bring up the volume on this thing, I mean, it's really low. It's really low. I think it's average was like 4,000 shares. Yeah. So I mean, you know, you look at these movements. I mean, this is insane. Actually, you know, I should pull it up on is if you look at stock charts here. I mean, every once in a while, you know, there's some volume, but a lot of days are real low volume. But who knows? I mean, this could be, say it was another down day for them. I was thinking this would get really interesting if it got down back to this level. Because if it taps that level again, I might want to go heavy into that one. But we'd have to just, the only other thing is I want to go through the numbers one more time. And when you went under their business plan here, or presentations, oops, hold on. I believe this is the one I was looking at. And this doesn't talk about that. I mean, now that the litigation's gone, but it, you know, it explains the products a little bit. You know, this was what I was looking at, is this expanded addressable market. So obviously they're talking about expanding into different kind of markets. You know, because they now offer a few different products. Really, it opens up how much they're expanding. The only thing though is obviously that margins are going to be different for each one of these. Some are going to be great, some are going to be not. So it's trying to play those right and make sure that you're getting the best. You know, balance sheet's pretty clean here. now that the litigation is gone. There's a little foreign risk here. It looks like U.S. and Canada, and then they just consider international as the rest of everything. They kind of group all into one. And they're trying to obviously work on margins. That's the big thing is where are these margins at, and what kind of free cash flow are they going to actually be generating? That's what I need to really try and hone in on here. And like I said, my numbers here are a little all over the place. I mean, obviously that's the big news, is that's what's changed. It's actually strange. There's this many analysts looking at this company when it's got such a tiny market cap. That's kind of strange to me. Usually you don't see anybody looking at these. But I'll keep an eye on this one. Like I said, I want a little bit bigger of a pullback. Hopefully that's I won't kick myself for thinking that. But I mean, like I said, you look at today. Like, look at this. I mean, this is insane. You know, there's one person bought, I'm assuming. Basically one person, maybe two. So it's pretty liquid. But it is a compelling story, and it's just cheap. And I know I said 40, but that's if the, I don't know, the balance sheet looks clean to me, and the fact that there's only 2 million shares. If this thing generates cash flow, I mean, it's worth a lot each share, which is why I'm giving it such a decent valuation. But all right, we can keep moving on here to UMA. Yeah, because we look at these guys. This is one I have not looked at. So UMA provides communication services related technologies to the businesses of all sizes, residential customers through a smart cloud-based software as a service platform. The company delivers advanced voice and collaboration features, including a bunch of different things for messaging, and maintaining UMA services. I feel like I heard of these guys. So offer a cloud type service. Pro offers HD video conferencing. So it's like a Zoom. Like at least it sounds like a Zoom. And they have a pretty clean balance sheet, it looks like. Considered safe. It's overpriced. So, but it is generating cash flow. But it's gonna have to change that. What are margins here? Just actually becoming positive for the first time. So, that's interesting. Let's see what this insider was. $98, around the $10 mark, just recently, real recent. Okay, yeah, $10.98, and we're at $10.63, so it's actually down a little bit from when he bought. No dividend. Let's just look at the actual cash here. Cash. Let's see what this debt is and why it's risen a little bit here. They have slowly diluted shareholders here too. Just something to think about. Yeah, sorry guys if I'm coughing on here. Sorry, my wife coughing. Our daughter's been getting sick left and right here. It feels like it never goes away. No, it's also that time of year. Not to blame my daughter. It's not her fault. I feel terrible for her. Her cough sounds even worse. let's see here. What was I just doing? Oh my god, I feel like I'm also half asleep, guys. But either way, I mean, the one thing that's nice about the streams, even though it gets kind of late because I'm up early for work and everything like that, but it forces you to kind of go through and really try not to get behind on things because it's tough to always stay on top of everything. But look at that. I think we're just gonna go to the SEC because we're checking the debt. So let's go through here. That's why I need a beer. I should have grabbed a beer before. Long-term operating lease liabilities, debt net of current portion. I should look at the stock-based compensation because I'm just wondering why where the share count's growing though at the rate it is. 3 million. Yeah, so something to think about. And I think the rest are all just basically the leases here. Oh, this is straight up just the values. They have 18 million cash. So yeah, I mean, I think relatively clean. Is anyone sending this over to the database? Let's see if anyone's talking about it because it's always my next question here. Steady growth but missing value from yesterday. Dan Victor? I don't know if I know this guy. Yeah, so I mean that's another thing obviously is there's a lot of competition. Granted they look, I mean it's a clean balance sheet and all that, so you know if they even find a niche somewhere in the market, continue to kind of stay where they are, that's not a bad thing. People rank it high, and that's the other thing too. What was the what's the market cap on this? I mean, not that it's like tiny, but it must mean people like it because it doesn't seem like very many. Just if you compare it to the other companies in like the field, like like Zooms or those, or Google. I mean, these are massive companies. A very high ceiling. Thanks, Greg. He's saying that reflects. I'm saying that's a little high, but he's accounting for growth, which not to say you shouldn't account for. Obviously, this is a company you have to account for growth. Do I think it's worth $10? No, but it's too much. So, but interesting nonetheless. Something just not like it's good sometimes. Like even when I'm screening, sometimes I'll pull companies in because I found that even if they don't really fit my criteria, sometimes it's good to just keep looking at things. So sometimes, like, let's say I go through and I find 3 or 4 stocks I'm interested in, I might throw 2 or 3 other ones that, like, for whatever reason catch my eye because just sometimes learning some of these different companies, like now I know what UMA is, and it just kind of gets categorized with all these other ones, and then if I see it again and something's interesting, then I can kind of skip to the chase and figure out where I'm at, how much is it. Like I said, it doesn't really matter what I'm putting in as a value right now, even though mine's saying it's only $3. That's not including any kind of growth. So if it grows and I end up watching the stock price, I have a hard time thinking it's going to grow so fast that it's going to go way over $10. So it's going to be a point where it comes down that it's going to interest me, not the other way around. But sorry, I'm just checking something real quick. you know, good fundamentals. It's too expensive. That's the only my issue with it. It just kind of needs more insider. I didn't check owners, which, you know, I'm not really worried about. And then really, is it a fast grower is really more my question here. That's not what I wanted to do. There we go. All right, on to the next. You know, and this is one thing too. If you were to, I could trunch into, like, let's say Barnes and Noble or NCS. If, you know, it, like, that's a strategy obviously that'll work. Most people do trunch into things. I tend to take a heavier position kind of at the start, and it just kind of limits my my amount of entries into things. Makes me I really seriously take my time. And the nice thing is sometimes, even with all the news going in the right direction, you know, you see these guys and they take pretty decent positions, but the stock continues to go down. There's some seller or someone that's driving things down, and it's gonna pop at some point. You know, I don't know if that person's just fed up and bought in way at the wrong time or something, but a lot of times you'll see stuff come, you know, it'll pull back, and then you'll get this like awesome opportunity at such a great entry point. And if you're able to take like a decent sized position when that happens, you know, you can really kill it. And I know the obvious other way to do it would be to, you know, spread the bets out. But I just feel like there's a certain size that's going to make a lot more sense to start where you're going to have to really spread your bets out. Where I feel like as a retail investor, you're just nimble enough that you can hop in and out of these things, and as long as you feel like your downside's minimal, then it doesn't hurt to jump in it with a larger position. So I haven't looked at BVN, which is Compañía de Minas Buenaventura. It's a mouthful for an English-speaking person. Is a precious metals company engaged in exploration, mining, processing of gold, silver, and other metals in Peru. Okay, include production and sale of minerals. I always wanted to go to Peru. I bet that's a cool country to visit. Construction and engineering services, energy generation and transmission services, insurance brokerage, rental of mining concessions, holding of investments and shares. Whoa, that's not what I was thinking. Okay, it also owns an electric power transmission company. Why not? That's not where I was thinking that was going, but so this is another one too. I could really check the balance sheet here. I also have to look to make sure. Yeah, see, this is another thing too. The years, they don't file, so real quickly, I just have to adjust this. So they file for my data yearly. So all I have to do is just take this and put this right there. That'll change it to yearly. And now the picture looks a little bit different. So it looks like revenues got smacked around COVID and then back up. Share count's down, and it was steady before that. It's a real small dividend. What's the price? $13.94. Market cap $3 million. Somewhat levered. EV's $4 million. And the other thing too, sometimes from the share radar data, like you'll see my EV. It's not like certain things aren't calculated perfectly. So that's part of the nuance of learning and building out these spreadsheets. I could adjust things and I could try and like hone it in, but I don't think it matters. I can look at what other people are saying, and I'm obviously gonna always check the SEC anyways if I'm that interested in something. So I can kind of go through and make sure the numbers are more accurate in my head for how they actually represent. Because now normally these guys don't generate much, but it looks like they're killing it here for EBITDA at least. What is net comments 600? Did they sell something? There's an acquisition there, and then they got their debt down quite a bit there. 80%. What in the world's going on here? This makes you just want to read what's going on with this company, because those numbers seem nuts. Now, this is in Peru. Whoa, okay. A major share price opportunity for further headwinds. Oh, how old is this? Where's this jump? Ooh, this was on the 14th. Sells its risk and insurance brokerage. So, several headwinds outweigh the positives that can engage from a potential gold bull market. In addition, the stock does not seem to have a solid financial base to significantly improve production, which on the contrary has deteriorated for most metals. So if this is really a gold play too, dash here. I knew I'd taken out highs, but it's back trailing around. But I mean, it keeps tapping that high. And the volume's nothing crazy though. Not here, but I mean, but it keeps spiking. So who knows? Who knows where the gold's gonna go? I don't know how people trade commodities like that. Like, that is not my specialty. I mean, I get it. I get it. You're probably more thinking inflation and how's that going to affect the price of gold. Gold's going to be stagnant in terms of that, and it's not like the amount of gold is, you know, skyrocketing high right now. So it should just go up, is what I'm saying. All right. Well, they didn't sound very great or real impressed with what's going on here. Just want to see just as. Yeah, I saw you said whopping rise in stock price. Sales heavily depend on the copper market, which is at risk. Potential recession in the U.S. Weak near-term conditions. What's copper doing? Just zooming out just to kind of get my head wrapped around where things are for copper. Yeah, I got around 655 that I actually think that's fair value for it. And so reason mine's discounting it so heavily is because of this lack of cash flow. I have my whole thing set up if cash flow is kind of weak. They're buying back shares though, it looks like. It's got to be what that is. How much on the company's risk and insurance brokerage? Deals for 33, has additional variable. No one's talking about that, huh? Yeah, and then you got to deal with all the issues of mining too. I just saw they had a mine that said it was down for 3 years now because who knows what. That's the kind of thing that just like puts a bad taste in your mouth and you question it. So this is from, was that May 5th? It's saying December 31st. Statement of financial position is what they call it. We got them broken out into two different. I think it's broken out into two different. It's kind of strange. Why it's like that. 253, 577. So am I in a mix of these? Just so I can see what's going on with my data here. I get 246. Perfect. So I'm probably more looking at just this side of things. I hope not, because that's even more confusing if my data is that off. Oof, okay. Yeah, I'm not gonna kill myself to figure this out. So what I'm gonna just kind of take from this, and this is the thing too, you know, as I continue to learn to invest here, it's I'll keep an eye on some of these things, and if this goes up and I miss something, you know, maybe next time I'll be like, oh, you idiot, you should have, you know, you really should have dove into this more. But, you know, for me, just looking at it from like here, like I don't see enough. You know, I have to just jump too, like, I can't picture it being, you know, if it's worth $8 or $9, sure, but is it worth 13 right now? I mean, you know, that's all time, it's highs, you know, right now. And don't get me wrong, this is up. This was cheap, and based on what that's saying, it does look kind of cheap. You know, book value was $12, and it had gotten down to 10, but not terrible. And then started to climb back up. The share repurchase too is gonna mess with things on my numbers. Looks like they're trying to sell assets though. Hopefully improve margins. That would be what I would hope the goal is here. But, you know, you're going to have to deal with it. It's a commodity, so it's cyclical too. So, and it's got foreign risk. There's so much going on with this one. So this one is tough to really value well. At least, what the heck did I just do? What I hit? All right, here. What do we say? 655. Go with that for now. I'm not super confident in this one. It's definitely too expensive. Foreign risk, commodity, cyclical. It didn't have a dividend at times. It's dealing with some selling of assets. It did have a good quarter recently. I guess I'll say poor narrative, as in we're heading into a possibly worse part of the cycle, and you know, if they really are completely dependent on U.S. copper, which it's a very specific thing to be. Because I didn't quite understand. Does it have to do with when they're mining? When are they using the copper for? Or is that part of the electric part for the business? Or are they just mining it? It's like, that's what I'm saying. There's like all these different things it could be. Doesn't really go into it. I'd have to actually go into the SEC report, or maybe they have a business presentation. Oof, who knows? Presentation. Last presentation. Sure. We'll go with that. Let me see if you guys can see that well enough. Let me see if I can zoom in. There we go. All right, so Trying to increase the loads out of these things and focus on their strong mines. New mineral resources. So so it looks like Peru actually is happy with mining and all that, which is good. At least in terms of they're trying to spur the economy, so they're pro it, because it can be the opposite in a lot of countries, especially with environmental concerns, which is understandable. Not saying one way or the other. It's just more you got to think about that when you're talking about an investment. This guy looks pumped. So is this lady too, actually. These, I feel like someone probably just like looked around and was like, pose. So trying to keep it expanding here. But I mean, they own some. These are some serious mines. It's a serious company here. Just in terms of size, I'm saying, like, it's not just some like one of the small miner. And I know the market cap is big, and I do transfer all these numbers over to US dollars, so this should be all accurate in USD. I'm surprised I hadn't run into this one before. All right, I don't think. Sometimes it's tough too. I don't even think if I do look at that one that there's going to be much on. Let me just see if Well Wisdom has them on there. If there's any ownership that I could look at. It might all just be Spanish investment groups that I've barely heard of, and obviously the big ones. Lunin. So not really my kind of thing here. There's one other person I was going to look at. $29. It's the second largest position they own since 2020. What is this chart done? Oh yeah, that's right. This guy's the one that took off. Oh, sorry guys, I keep yawning here. Oh my god. All right, here let's do F7. Actually, you know what? Speaking of that, I might as well go get a beer. We'll keep this going, but be right back, guys. All right, just give me just a minute here. All right, I'm back, guys. Sorry about that. Much better. All right, here. Good Times Restaurants licenses Big Daddy's Burger Bar restaurants. Where are these guys? Oh, I was gonna say I've never heard of these. Colorado. If you're not from the States, it's a big country, man. There's stuff you never even heard of, and you know, like you go to a different region, it's like well known. Everyone, you know, there's hundreds of stores in one area, and you're like, nah, I never even heard of this. Really small market cap here, so it's gonna limit how interested I can get. Not to say it doesn't interest me. And looks like my calculator is saying it's relatively fairly valued. But it does have some pretty good cash flow. You know, I could see this being worth probably like $3 or $4. Revenues are increasing pretty steadily. Share count stayed the same. Margins are looking pretty good and cash flow steady. Free cash flow, I wonder how much they end up spending in CapEx. A decent amount. Looks like they generated a lot of earnings here. Where's all this earnings come from? What's going on with the debt here? Is that when they took on the debt? How much cash they have? 3. Is this all leasing type stuff, or is this debt? Oh, they just filed. Nice. Anything? If I see someone just filed, sometimes I like to just check the chart, see, get an idea of what's going on there. Probably was super good, super bullish. Where was I here? I'm trying to go back to this. Sorry. Oh my gosh, you don't realize how many times you open up so many different web pages when you're doing this. Okay, so they don't have a lot of debt. It's all operating leases, so it's a pretty clean balance sheet if they got $4 million in cash. Oh, no, it's right. Yeah, it's just a credit facility. I'm assuming this is all kind of in a growth strategy here, but I want to just take a peek at the Good Times, Bad Daddies. Interesting. All natural burgers. Theirs are not grown in a laboratory. Conference call. You don't got a presentation? Give me a presentation. I just want to be wowed by your PowerPoint. No events. Let me just see what this. If I wanted to listen to that, I would have done that. All right. Well, that's kind of a pain. It doesn't really show you. Well, we can get all this from Seeking. Let's go to Seeking. See what anybody's going on here. Did they have any insiders? Anybody's buying this? No. Wait. This is. It has good fundamentals. It's really small though. I mean, as a market cap. So maybe that's just shying people away with only 12 million shares at a price of $2. Kingdoms looked at it. Good times for attractive multiples, repurchasing shares. This is from June. This is just from December. So they just missed earnings and had revenue of 34 million. Is this quarterly? No, year to year. Okay, okay. Quarter 4 is EPS, I was going to say. So it's like... okay. Increased 2.4% for the fourth quarter prior to the year. Fourth quarter, it increased 3.7% for the year compared to 2022 fiscal year. Adjusted EBITDA was 1.1 million. Expected to resolve a lawsuit with White Winston Select. What the heck is going on there? Oh, their drive-through vertical? To resolve the White Winston suit, complete their buyback authorization, and re-accelerate Bad Daddy's unit growth. Once accomplished, I believe management will liquidate the company. Until that happens, they can continue to devote cash flows to reducing the share count and increasing their payout upon a sale. Insiders own 20% of the shares with no other major holders, keeping their incentives well aligned. All right. Paid off debt, reduced outstanding shares, grown the restaurant ownership. Addressing it. Big Daddies. Wonder if anyone ever tunes into this, you know? So I know hundreds of you are probably just struggling with the internet connection to get in here and whatnot. But if you've been to any of these places or anything, could you throw it down in the comments to let me know if you like it? Because I've never been, and I don't get out to the West Coast very often. If I do, it's San Diego. Blah, blah, blah. 37 stores in 2019. All right, so they're expanding. Joint venture contributing an estimated $850K. Sorry guys, I'm just trying to read through here just to get a better idea what's going on here. Elevated commodity prices. Stock prices, external pressures on payroll, inflation, road blockages, weather. Yeah, I'm kind of getting the same thing that the this is one of the ones that, because it's so small, sometimes the tough part is like, how are you going to get the value out of this? I mean, they have pretty good simple free cash flow. They're expanding. They're still growing. So I mean, these numbers they're steady, and we made it through COVID, which is that speaks volumes. Book value, and they're gonna keep buying shares back. I wonder how much they've been buying. They said they're reducing debt. Yeah, okay. It was at 76, now it's at 40. Okay. So they are. So that's good. Was that all operating leases? I thought that's what mostly it was. An interesting one. It's small. It's really small. But I'm curious to see what the average volume is. So nothing trading crazy. But we are low here. 225. Now it's at 228. That's the other thing too. If the Big Daddy restaurants start to have way better margins than the original Good Times or whatever it is, it's already pretty well run, and that, like I said, they haven't really done anything stupid to put themselves in a really crappy position. I'm kind of disappointed that EPS though was negative. I would have thought. I want to know what cash flow is this recent, and I know they bought the stores, so maybe it's just because they bought the stores. Is that in my data too? The -4. That's probably the -4 for the acquisitions. So, and they don't normally get them that way. They're usually just building organically, not buying them from someone else. And they did say they paid up for them. So, I think that makes me think that this is pretty cheap and in a pretty good spot. It is tiny, but I'm intrigued. Let's say good narrative. Obviously too small. When I say too small, I don't mean like it's too small to buy. I mean like that's like just a risk factor. I'm gonna say good fundamentals, low debt. There's 2 insiders. Kingdom's bullish on it. I'll put that in my notes over here. It seems really cheap. There's litigation that could go away. Definitely throw this on deck. And then what do we think this is worth? 238. But we had that this is probably going to be adjusted a little bit higher. Let's say I like it there. I think that could be fair value. I'm getting that as an entrance. Do I think it would actually get that high? What does the old chart say here? Probably not. Not on an earnings loss. So that might be too bullish of a call there. But and probably that it's partly due. I mean, I know there's the TLYS is here. And there's litigation against him too. Yeah, I'm wondering if I should be more conservative on that mark. Just want to see what he was saying. When they're gonna resolve that. Yeah, that's an interesting point. I'm definitely going to read the actual call because it sounds like Kingdom was on there and actually, and I don't know if you've listened to him interview or anything like that, but it's always worth listening to if he's looking, he or she, whoever you are, is looking into it. That's an interesting one. Like I said, the issue with that one is it just looks, it's just very small. You know, this is pushing where I start to get interested just because of being able to kind of get in and out of these things without getting killed. But I mean, there's still decent. I mean, like today's at 30, 33. You know, I haven't really been. I really should be checking Twitter for some of these things too, because some of these small ones too. Like, is anyone talking about this? Oh, what am I posting? I don't want to post here. I'm trying to search. Yeah, this is the only thing that's kind of killing me here. And who knows how long that litigation could go on? That makes me a little bearish. I think I'm going to adjust my where I think this one's worth. So, I would like this to drop just a little bit more. Where did it ever touch that? It touched 215. You know, if it get down to the 230, I would look into this pretty seriously. There's something. This one's interesting. So far so good. We found some companies tonight. You know, things that we'll kind of get like a list going, and then kind of weigh them back and forth, and figure out which ones I'm most confident in. You know, and as I said, if you're taking a concentrated position, I weigh that by kind of picking maybe one or two of the names and just going in on them, and for better or for worse. And the other thing that really comes into play too is like I'll really sit there and try and figure out what my margin of safety is on these kind of things, and that's always why you'll see me put in a price, and eventually I'll sit there and I'll go back and forth and I'll be like, nah, I want to lower that, just because there's always reasons to think you're missing something, you know. Obviously the whole point of doing this is to try and miss as little as possible, but it obviously can still happen. So Just have to be cognizant of it. But I like this at this level. I think this is looking sort of cheap to me. It's 230. That's really not even a bad price. It's disappointing about the earnings. But like I said, I know I'm talking in circles to myself here. We'll have to figure out exactly why those are where they're at, and then see if I can adjust those there. All right, what time we got here? We got 9 o'clock. Man, it's already 9 o'clock. There's quite a few companies I haven't looked at yet. Bulgari Holdings, its holding company, owns various subsidiaries which are engaged in a number of diverse business activities, including property and casualty insurance, licensing and media, restaurants, and oil and gas. Seriously, this is extremely diverse. Steak and Shake. Oh, yeah. Apparently we're doing a lot of stuff with beef tonight. Another one with a super low share count. And some very interesting insider here. So this is the CEO / everything. Oh, this is a high price stock here, huh? Is that where we at here for a price? 170. And I get 378. When did he buy? This is just now this guy bought at 335. If that actually the price though. What in the world's going on with this chart? Down to 140 and really popped up. I wonder if there's news or something on this. This is crazy. It owns oil and gas, natural gas wells, property and casualty insurance business at 533 million with 2 million share. I mean, there's a lot to dissect here. This is a lot of different businesses going on here. A lot of this I'm going to try and just skim over the balance sheet, just get a basic idea of what's going on, which segments of the business are actually productive. What does management do with that? It's not the one I wanted to click. I just want to see if someone's written about it and can kind of speed up the process of digging here. Here's oil and gas development deal. Cap EPS of 100 minus 195. Revenue of 90 million. It's pretty wild. I'm just gonna skip to the overview here because there's to 468. Class A is 754. Overstates the actual market value. It is essential to exclude the 331,000 shares that they own themselves. Market cap of 217. Now it makes me want to take a peek at the balance sheet real quick just to see how that's structured. I'm surprised it didn't say anything about the Class A shares here. Are these all Class A? And volume here is going to be tight at that price. The average volume is so low. I don't know. Earnings per share is 13. I feel like this is somewhat pricey. Oh my god, I'm sorry, I can't stop yawning tonight. It travels at 200. Revenues are way down. This one's, like I said, tough to value because if you got insurance business and all these different things going on here too, all that can weigh pretty heavily here. I mean, I will say it's bullish that this guy is the insider here, but the other thing I noticed too is, I mean, it's saying he purchased it at 335, so this is, I'm assuming, some kind of warrant or something. I mean, how did you go from 219 to 335? Obviously, it's a problem. Oh, NASCAR's here. What's up, man? Sorry, I just noticed you're here. Just see ZJYL attempted to trap short, and it works spectacularly well. 509 open after hours. 20 times move between halts. Nah, I mean that's pretty impressive. That's a big move. Let me pull that one up just to take a peek what's going on here. ZJYL. What was the short percent? As of November 30th. This was yesterday. 45 times from low to high. Wow. That is pretty crazy. That's a ridiculous looking chart. Is that what I was just under though? How was I under CJYL? How was it that much of a short move if unless I'm missing something here, just the percent of shares float just so low. What is the volume on something like this? I mean, actually it has decent volume, 85,000. Or was it all shorts that bought in here? Is that what you're saying? Because that's from November 30th. So if all the shorts came in here and then got bought out, which, man, you're not kidding. That's a strange gap. What was the I don't even know how do you even trap someone quite like that? That's wild. Is this something you were in on, NASCAR? fundamentals. It's a holding company. This one's pretty complicated, actually. I'm not super confident in this valuation, so I'm not going to sign it real high. And then, like I said, that's just because of the insurance and all that. I watched it at 13, halt up the level, but it opened at 23. Tough to chase when you really haven't seen this type of setup before. Yeah, I get that. I feel like that's got to be a huge part of being a chartist. Is just if you've seen something like that happen before and you're watching it unfold and it's following all the guidelines that you would expect it to, give you real confidence to enter a position. But otherwise, it's taking a shot in the dark there. The other thing too, where are these guys out of? That's my question. Owns Maxim. I feel like I remember hearing of these. Steak and Shake. Oh, okay. So it was under Steak and Shake Company. Okay. I definitely have looked at these guys. This is really all over the place. I'll put in what I have, but I'm gonna take that with a grain of salt, and I'm gonna require a pretty big margin of safety here. We'll say I want to know what they're saying about this, because oh my god, this just seems like stupid. That's a minus 195. Like, how do we go from positive to minus $195 a share? Like, what the hell happened there? That's a comment I'll actually agree with you on, Illuminati there. That's pretty ridiculous. Like, that's what I'm saying, the value on this one, like, I mean, honestly, who gives a shit? Yeah, I don't know. I'm gonna use pretty much technicals on this, actually, because I don't know how you value anything off that. Confidently, at least. Another Chinese recent IPO with Prime as the underwriter, 70 days post IPO right now. Could be rotating out of them into. Yeah, I don't know. I was gonna say historically, yeah, but it just needs more. The insider is good. I say tough to value. That's one I wish I would like to have someone that I know a little bit better trying to look into something like that to get a decent idea, because that one's honestly tough. Oh, I've looked at Zim. Oh, all these stupid fleet ones are all over the place. That's the Israel-based one. I remember the valuation on this didn't make any sense. What was their debt level with these guys? Yeah, they had really high debt. That's probably the issue, is they can't pay it off. Yeah, and NASCAR, I mean, I can put in GMM, but I guarantee you if it's just one of these Chinese IPOs, it's not going to have any information. It's not going to have much. I don't know. Yeah, I'm only going to have a year of data. It's not going to... You're not going to be able to appreciate anything based on the value side of things. That's all going to be narrative. I wouldn't worry about going crazy with that one, because as you can see, my data here is pretty much useless. You know what it pulled in. It did pull in yearly actually, so, but I don't know how. I mean, this is the thing too. Like, that's not what I meant to do. I'll do that. You know, I can have this split out a little bit, but do I trust these numbers? Like, no, I don't. So, who knows? It's 11:33. This is charts only. And this is where you buy. Somewhere down there, because it's not worth what that's saying, based on the numbers I have, which, like I said too, can be heavily distorted based on the fact that I remember Zim. I'm not looking at Zim right now. I did want to look at peek at TLYS again, just because I had recame up on my I've been in TLYS before, and I think it was starting to bounce back up, which is what caught my attention again. Or no, we're back down. Oh no, that's what it was, is that we're back down with TLYS. And, you know, as typical of retail right now, it's struggling quite a bit. Let's see, anyone writing on TLYS recently? Just close out some of these stupid pages here. Alright. The picture is growing worse. That's an interesting way of saying it. Investors would be right to be worried about TLYS. So he's just saying the fundamentals are, which, you know, revenue's down, book value's down a little bit. All these cash flow operations aren't great. Negative EBITDA for this, you know, trailing 12 months. That's a company worse. So that's not really adding to the picture. So part of the reason I just, like I said, I was pulling this up, I have followed these guys for a while, and my question really is, it just of the retail environment, how bad it is, or is it truly that the company's like suffering? There's Insider too. Oh, it's just Fund 1 Investments. These guys, these 10%ers, they've owned it, and they just keep buying up. Interested actually to see what their cost basis is. But this isn't bad. It's a closed back deal. Should debut tomorrow. Some wording in the file that makes it sound like a dumpster fire in my experience. Those are the ones that run. The worse it sounds, the higher it goes. Yeah, that's so common with so much bullshit in the markets. So much for efficient market theory. I had pulled cons in again. I know cons have been suffering. Ah, someone bought back in. What is this volume? You know, I'll probably kick myself for not getting back into cons at these lows. 381. Is that all today. All that 33%. Oh. See, look at this. Reports Q3 loss yesterday, misses revenue. Oh, interesting. So they're they acquired this Badcock. Oh, all right. I didn't realize there's an acquisition here. Well, that changes everything. I don't think this really matters as much. This is one of those stupid, like, robot articles. I don't know if I had pulled this up, Seeking Alpha. I'm just interested to see what else was said about this. Yeah, this is the thing. So they do a deal and they get this big, you know, another company and all these stores, but like, what does that mean in the long run? Yeah, I don't know if you've ever looked at CONN, but or if you've ever even been to the stores. See, Illuminati's a little scared too. This guy was expecting bankruptcy on this. He's so like stuck on the fact that he thinks this is gonna go. This is so stupid. Not necessarily him, just the comments. Now Illuminati's a little nervous. You can see it in the way he's writing. Interesting. No, this is the thing. Some of these things get cheap. It's when you catch it. It's when you can get lucky. You've been looking at everything. You know, everybody's just writing it's going downhill. That's when it pays to be a contrarian. But look at that volume. I mean, what's stupid volume? 1.5 million. See, this is NASCAR. One thing we were talking about too is, you know, me possibly getting you into. This is a company that I followed for a long time and been in and out of. But Conn's would probably have been one that maybe you could have. I could have given you a tidbit on that. You know, I liked it for different reasons, even though I think it's in a tough position, but I don't think it's like dead. But sometimes those are the ones worth taking the risk on. But I've been saying too that I've kind of adjusted my strategy where before I would hop into something like this with a really small position and just kind of let it ride for a little bit and just see if anything ever happens with it. Because if it gets to a certain point, it's just so cheap that like it doesn't really take much. It takes like this kind of news where it's just news essentially. Like, you know, I guarantee most people don't have any idea what this is going to do for the business. It's just something's changed, and off that people kind of are like, oh, let's see what happens here. I mean, it's saying it has cost synergies, but like, you know, what does that really mean? Is it really going to have cost synergies? Because it's real easy to say that, and then who knows? So let me go to CONN real quick. That's the thing. I always had said they were undervalued, and that's the if you're within my margin of safety, it should somewhat interest me. But the value is subjective, so. And you know, I'm not going through with like a fine tooth comb and trying to really calculate like the value of all the assets and stuff. Like I don't think you have enough time to do that. I think you'll drown yourself in numbers with the amount of companies I'm trying to cover, I should say. Let's see here. So how much cash do they have? And then it's all stock is what they said. Liquidity, the additional bank account collateral extends debt maturities by 3 years. It's interesting. $100,000, $89,000. Man, these are some serious share movements for this size of company. Does it say anything about insiders? Like, I can't believe no one at Conn's thought it'd be a good idea maybe to buy on this news. Unless like they weren't as bullish as the rest of the markets on this. All right, it brings us to 9:30. All right, I'll probably wrap this up. Sadly, I didn't get to really go through too much of this stuff, because the other thing too is like, where was Conn's on this list? Conn's was on here, but was up 30%. So when this was on here, this is under daily mover, so this is a gainer. So this could have been one that's why you gotta be right on top of things. You're even a day behind, you run into these issues. And that was just because of that huge pull or pullback there. Up to 3, back down. Interesting. Yeah, we'll have to see how that all pans out with that acquisition, or merger, I should say. All right. Well, I'm gonna wrap this up. Hopefully, get a little caught up here, especially with the holidays and stuff coming up. I know I'm busy. It might be busy or it might be harder to keep up, but I'm hoping having some downtime from work and whatnot, I'll be able to get caught up on some of these things and see if there's anything that catches my eye. Well, the past 13 SPAC mergers, nearly half has had 100% runner at the debut. Yeah, I feel like when SPACs debut, man, it's always a crazy day. Stuff bounces around so much. All right, man. Well, thanks for stopping in again. I'm pretty sure Johnny will be doing his on Thursday, and then we'll be on Saturday as well. So if you're on and looking to come through, go with it, man. MSAI. I'll keep an eye on it, man. Yeah, no, it doesn't even exist. Well, yeah, we'll see. Does something like that come up in here yet? No, nothing yet. Yeah, no, I remember HKD, like you were saying, that was one of the ones I was looking at randomly. It's just crazy to watch some of these things pop the way they do. But, all right, thanks for tuning in, man. Have a good night. See everybody.